Welcome to our latest edition of Investment Committee. This is a special edition where we're going to talk about the 2024 year ahead. We recently published our 2023 annual letter. I talk about a lot of the detailed performance, commentary, and the goings-on from last year. This video is going to be primarily focused on what's to come this year from our perspective. So first I want to talk about Megacap tech stocks for our flagship strategy. These are the tech stocks that have propelled the market higher in 2023. And fundamentally right now, these companies are firing on all cylinders. I'm talking about the Metas and the Amazons and the Googles and NVIDIAs and so forth. We do see continued strong revenue growth and margin expansion from these companies this year, beyond Wall Street's estimates, generally speaking, across this basket of companies. As well, valuations don't really strike us as overly expensive. It's easy to look at these stocks and be like, oh, have they run their course? But especially with interest rates possibly having peaked last year and looking to come down this year, valuation multiples for these stocks should mathematically go up. The fundamentals and valuation, reasonably attractive. Now, these stocks are quite well owned by Wall Street. Many retail and institutional investors have stakes, sometimes quite big stakes in these companies. And so the question is, what money is left on the sidelines to come in and buy these stocks? Some recent surveys that we've seen suggest that there actually isn't too much crowding in these stocks. They're certainly well owned and quite well talked about, but there is a lot of money sitting in money market funds and cash on the sidelines. And we don't think these stocks are necessarily so crowded that they can't continue to move higher. So taking a step back, I say the counterpoint to that is we do think sentiment's quite rosy. And with Q4 earnings come up, any number of these companies could see a short-term stumble. So we would not be surprised to see a short-term correction and some volatility in these big cap stocks. And that would obviously affect the S&P and possibly Flagship as well. But that said, we expect any meaningful short-term drawdown would just be a pullback in the span of a longer-term bull market. So we'd possibly be buyers on that dip, and that's why we're holding some cash still in Flagship. Next point of discussion is emerging markets. We're really excited about some emerging markets like Brazil, Mexico, China, and Japan this year for a few reasons. Let's talk about LatAm first, Brazil and Mexico in particular. From a currency perspective, from a bond yield perspective, we think there's a lot to like about these countries. Specifically in the fintech sector in Brazil, we previously used to own a couple payments companies that we sold a little over a year ago. But we're continuing to do our homework here and possibly look to buy some companies in Brazil and in Mexico in the payment space. A lot of secular tailwinds at the backs of these sorts of companies. In China and Japan, China is really interesting because it's a very hated geography right now, very opposite the US. Short China stocks is one of the most crowded trades on Wall Street. But if you look at the fundamentals, they're improving. There's a lot of investor pessimism, but we're getting, we've seen the Chinese government want to be increasingly accommodative, and that means drive credit growth, more corporate borrowing, trying to support shareholder returns ostensibly in these countries in sectors like agriculture, manufacturing, semiconductors, and so forth. So we think China could be oversold and have some interesting opportunities there. Japan, a little bit different story than China. Japan had quite a good year last year, and some of these stocks are pretty fairly valued, but I wouldn't call them necessarily expensive. But again, like China, the fundamentals in Japan seem to be improving. The government is becoming increasingly shareholder friendly. It's by no means as hated as of a geography as China is, but we don't have much exposure in Japan, and global equity ETFs tend to have pretty meaningful exposure. So we are underweight Japan, possibly, versus what we should be. So we're doing some homework to look at stocks in Japan. The last thing I'll talk about is alternatives, specifically crypto. Just today, as of this morning, the SEC has approved 11 spot Bitcoin ETFs. This is a watershed moment for the crypto industry. The first spot Bitcoin ETF filing was made over a decade ago. So this is the 10 plus years in the making. And the reason this is important is it could possibly be the moment that unlocks a wave of assets from institutions and advisors into crypto. Previously to this point, a lot of advisors wouldn't dip their toes in crypto for their clients because they didn't want to have to deal with setting up their own wallets and creating a MetaMask account, right? And dealing with these fragmented sets of accounts, dealing with security and all sorts of other risks. The ability to buy Bitcoin exposure through an ETF is something that advisors are well equipped to understand. They oftentimes buy stocks and bonds through ETFs. And so this could unlock a wave of demand from advisors and institutions to finally get exposure for their clients to Bitcoin. And that could bode well for the price of Bitcoin. So we think this is pretty constructive news for a product like Titan Crypto, which is equal weight Bitcoin and Ethereum, and pretty constructive for the industry broadly. It's not a firm stamp of approval from regulators saying they love crypto, but it's definitely a step in the right direction. So we're constructive on crypto relative to last year. So taking a step back, like big tech stocks, think the market should be relatively favorable for them this year, Wouldn't be surprised to see a pullback. That's why we have some cash to possibly deploy into that. Internationally, emerging markets seem much more attractive to us than developed markets, and we're kicking the tires, particularly in Asia and LatAm. And then on crypto, watershed moment for the industry. I'm sure we'll be talking more about this in the coming weeks. Again, if you have any questions, feel free to give me and my team a shout, and we look forward to what's to come this year.